Hello options traders, welcome back everyone. It's been a while since I've posted a video, so I thought it would be nice to maybe go back into some technical analysis which I've done in the past. And what I wanted to show you here was a neat little mathematical technique, what we might call a candlestick trick, to help you with candlesticks, trying to determine what one pattern might be equivalent to, or trying to figure out which pattern might be stronger than another. If you're brand new to candlesticks, this is probably not going to make a whole lot of sense, but for those of you who currently use candlesticks, let me show you this little candlestick trick that will help you to make decisions. So for example, maybe we're trying to make comparisons. Maybe we get two similar patterns, and the one that I'm going to use here for the examples are an engulfing versus a Haram E. And maybe we're trying to figure out which one is stronger. Which one gives us a stronger signal? Well, again, there's this little technique we can use, or a little trick, to combine candles to get a different view. Now, we can combine candles of any numbers. Obviously, you need at least two if you're going to combine them. Most candlestick formations are either a single candle or two candles, but there are certainly some that have three and more. And as long as you have two, you can certainly combine them. So for this video, we're just going to combine two candles. And what we're going to do is to take the opening trade from the first candle and the closing trade from the second. Now again, if you're looking at three candles, it would be the closing from that third day. It's just whatever candle is last in your pattern. And we will always use the highest high and the lowest low. Those are always going to stay the same. So for example, let's say that we're in an uptrend, and the next day we get this nice bright green candle, which looks like the uptrend is going to continue. And then the next day, the stock gaps up even higher. This is our opening trade here. But then something happens during the trading day, and the market ends up lower, which is why we get this red candle. Now this pattern right here, it's a two-candle pattern, is called an engulfing pattern. And because it occurred at the top of a trend, we would actually call it a bearish engulfing, because it's really starting to signal that we're probably about to see a reversal in the trend. So why is it showing us this? Well, as I showed, the only way that you can get this pattern is that on that second day, on that red candle, the stock had to gap up. And unfortunately, it just didn't last. It didn't stay through the day. And in fact, the closing trade is even lower than the previous day's open. They're in green. So notice that if we look at just the red portion here, what's called the body of the candle, and we look at the top and the bottom, which are the opening and closing trades, and if we extend some parallel lines out this way, notice that that green candle is completely enclosed inside of that red body, or what we would say is engulfed. And that is a very strong candlestick pattern. So the question that we have right now is to say, well, what other patterns is this similar to? And we can do our little combining technique. And here's how we're going to do it. We're going to add the first candle and the second one together. That's what we mean by combining them. And it's going to give us a different look. So if you're fairly new to candles, you might need to get your bearings straight as to which is the open and the close. So it will help you to label them. So on the green candle here, this is my open and this is my close. That's why it's green. The close is above the open. The red candles will be just the opposite. The open is the top of the box and the close is down here. Because the close is below the open, it's a down day and it's therefore colored in red. So if we're going to combine these, what were the rules? We take the opening trade from the first candle. So I'm just going to extend an imaginary line out this way from my open. That's the opening trade for my new candle. I will take the closing trade from my last candle, in this case because it's a two-day pattern. It is this closing trade right here. And this becomes the bottom of my candle. And like all candles, we just connect the open and the close, and that becomes the body. The rule said that we maintain the lowest low, which is out here, and then we also keep the highest high, which is up here. And so this becomes our new candle. However, notice that the opening trade is here and the closing is down below. Because the close is below the open, this candle would be red. So again, what we're really doing is saying, let's pretend that we're looking at a 2-day time frame. Instead of saying this green candle is on one day, maybe on Monday, and the red candle is the next day on Tuesday, we're just pretending that we're looking at a 2-day candle. And that's what we got right here. Now this formation is actually what's called an inverted hammer. And it's another type of candlestick pattern, very powerful one. You can see if we were to flip it over, it looks like a hammer. Because it's flipped upside down, it's called an inverted hammer. But if we got a hammer at the top, it's actually what's called a hanging man. But we can get hammers and inverted hammers at tops and bottoms. And yeah, they might go by different names, but the idea is basically the same. So what we're seeing here is that during the day, we had some bulls present. We had this nice long, what's called a shadow, or some people call it a wick. So the bulls were actually present trying to push the trades up this way, but they couldn't survive. They failed, and in fact, the stock price closed lower, which is why the candle is red. So we see some presence of some bears, and we actually closed down for the day. So remember, that's kind of an impending reversal because we had been on an uptrend, we got this green candle, the next day it gapped up, but then something happened during the day and caused this to flip, and that's the only way you can get an engulfing pattern. But now let's say we want to compare an engulfing pattern to a similar one called a Haram E. So let's take a look at that one. So let's say that we've got a different stock here, we've got our uptrend going, we get another green candle, looks like the trend is going to continue, but the next day we don't get this gap up like we did with the engulfing. In fact, the stock opens somewhere inside the body and it actually closes down. So this pattern is actually what's called a Haram E, and it actually translates in Japanese to pregnant. And if you use your imagination, the green candle is supposed to be the woman and the red candle is the belly here, the baby sticking out. That's where they get the names. I don't make this stuff up, but that, if it helps you, that's why they call it a Haram E. So the question is, what is this pattern similar to? Well, let's go back and combine them. So again, for those who might be new, to get your bearings, you might want to label these. Open and close. The close is above the open, that's why it's green. It was a bullish day. For the red candle, close must be below the open. This must be our open and this would be our close. That's why it's red. So if we're going to combine these to see what else it's equivalent to, we're going to just take the opening trade from the first day, which is down here. Right, I'm just going to extend that line out this way. I'm going to take the closing trade, which lines up right there, and that becomes the body of my candle. So this is the open, this is the close. I'm going to continue using the lowest low, which is down here. So that's the low trade. And then we use the highest of the highs right there, and that becomes my high trade. However, the difference is that the close is above the open. So this would be a green candle. Other than that, it's still an inverted hammer. Take a look at the story it's telling you. We had the bulls present through the day. That's how we got this long shadow up here. But during the day, the bears started to present themselves and push trades lower. However, by the end of the session, it was still a green candle. The bulls still won, but we still got the presence of some bears. So it's going to cause that doubt in the market. So it's still an important candle, but it's just not as strong. Notice it's still an inverted hammer, but it's green when we have the Haram E, but when we use the engulfing, it was red. So between these two, the engulfing would be a slightly stronger signal than the Haram E. So I hope that little candlestick trick helps you for figuring out some of the various formations that you might encounter during your trading day, maybe trying to make comparisons in them. Take a look at the combined patterns and see if it can give you new insights. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatozz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.